Hello and a massive hello to everybody. How's everybody doing? Hope we're all having a great day wherever you may be doing, having a great rest of the weekend. So 22nd of October 2017, no trade calls or recommendations or response for their own stuff. We're here for educational purpose only. So what's going on, guys? So as the market continues to grind to new highs and the favorite sport continues to seem to be playing whack-a-mole on the VIX, right? We're heading into an extremely interesting 2-week period, right? So we'll talk about, down the line next week, but I think it's important to note that it's a 2-week period coming up that's really interesting. This week we've got the PMIs on Tuesday, but really the action starts Wednesday. We've got BOC, so Bank of Canada, very interesting for a number of reasons. We'll look at the Loonie chart. On Thursday, we've got the ECB, so should be a market mover, key test market, and I want to see what Super Mario wants to do, but clearly a lot of implications across the board for risk assets, not only for the euro. And on Friday, we've got US GDP. The next week, as if BOC and ECB wasn't enough, right? Next week on Tuesday, we've got Bank of Japan with a press conference. On Wednesday, we got the FOMC. On Thursday, we've got the BOE, which again is going to be a very interesting one. And then on Friday, just a little cherry on top of the cake of this 2-week cake, we've got non-farm payrolls. So clearly, we're going into an extremely interesting 2-week period. So what are the most interesting things? What are the most salient things we would be keeping an eye out for? So in terms of equities, as the grind higher continues, really there's no big change in terms of the key bull bear lines, right? And that's 6,000 on the NASDAQ, 2,500 on the ES, 22K on the Dow, even though that feels very far away. And if you want something on the Russell, on the RUT, that's 1,500. But basically, those are really key bull bear lines, and it's going to be very difficult to get any real downside MOMO unless we trade below those. Now, instead of looking at the equity charts, which has just been a complete grind higher, I think the most interesting chart, especially if you're thinking about equities, to keep an eye out for is Apple, right? Apple really is feeling heavy. We've been talking about this topping for a long time, and you see how we're behaving around this 156.50. Now, what's particularly interesting is the divergence we're getting with Apple vis-a-vis all the other indices. Now, keep in mind that because of Apple's weighting and all the indices, if this doesn't catch a bid, it should be hard for the market to really continue to grind higher and pull away, right? So this is, for us, the most interesting chart here to keep an eye out for. So again, 156.50's bull bear line. If Apple starts to get some traction to the downside, then we believe that this time the 145 test will be there. It's lining up pretty much with the 200, and that could be the key. But again, in here, 165, 145, it's still choppy, but it does look heavy. And you can see some of this heaviness on other stocks, which, Amazon, we still think Amazon peaked here, and this is just being a sale here, nice sell here on this failure into 1,000. As long as we hold below the 1,000, we think we're coming back towards 920s. Again, that's the 200 DMA. That's another key line. Or you can also look at something like Tesla. Let's look at Tesla. Let's see if this is going to load. You see here again, it's really struggling, and as long as we hold below these 3050s, 3040s, our base case here hasn't changed, is we're coming back down into the 290s, 270s. But you see that all these charts, like the Apple, the Amazon, Tesla, they're all pointing towards weakness, despite the fact that equities are still grinding higher, right? And those 200 DMAs seem to be calling. But again, if you're only going to keep one chart up this week, if you have to choose, am I going to look at the indices? Am I going to look at, you can only keep one chart up, the chart we'd be focusing on is Apple, okay? Now, in terms of currencies, DXY, so again, DXY is going to be very, very interesting, and our base case hasn't changed here, right? And this will likely be into the ECB. We'll have to see what Super Mario does. But it looks like the sell-off was short-lived. We're basing at this 50, and the market is going to try and take another stab at those 94.50s. It'll probably get resolved into the ECB, but the way we're looking at this is either a break above those 94.40s, and then we can potentially really squeeze back up a couple of bucks, or if not, this is just going to be the kiss of death, and it means that we're back down, this is holding, and this is going to be extremely heavy, and 92s are going to come into play. So again, look at this 100 DMA if you want as a real pivotal level, and as long as it can hold above the 50, it could be trying to base. But any rip higher, we'd expect the 200 to attract aggressively, like we talked on those other charts. But it's going to be fairly interesting. And what does that mean? You know, why are we talking about ECB again? As we said on Euro, what this meant is our base case in these past weeks was that there was a asymmetric opportunity to get short, and there was another opportunity to get long. But our base case was still that we were going to stay inside this range until we got into the ECB, and that Mario had to help us decide on how this was going to play out, right? Let me see if I can delete this. If you look at this on the weekly, again, fairly clear. We're just waiting, and we're hovering. Another chart where the 200 is key. We're hovering around the 200 DMA. It's serving as support, and now it's up to Super Mario to basically call this, right? So either we're going to break down, and we think this could be, you know, a lot of people talking about that head and shoulders, etc. But we're still just looking at the levels. We think that daily close below the 116.50s could open up bigger retracement back into the 113. Or if we break higher, then this is starting to slowly open up the road into the 124s, 126s. So you can see same thing on the dollar. On, you know, it's the same chart across the board. You can run, but you can't hide, right? And the other interesting one is going to be on CAD, which we mentioned. Is our base case was that we had based on dollar Canada, that we were going to move back into the 124, 125, and the 124, 125 was going to be the pivotal level for whether we're going to go back to lows or finally come back and test this 128. So here you see rotation back out. We got a lot of choppy action. This 50 DMA held it, based, and bam, it's ramping higher. Now this is pretty much all in Polos's hands, right? So essentially, if the BOC completely disappoints and takes all future hikes off the table, then we would expect 128s to print this week, right? And if not, if they put them back on the table, then we wouldn't be surprised to see this try and come back into this 125, 124 zone. Well, the market will have to basically reassess what's going on and try and figure out what the next step is going to be. But here, clearly the risk is easily at least 150 to the upside, 150 to the upside, depending on Polos. But you see the charts have been behaving quite nicely. So that's pretty much where we are going into the week. I can't stress this enough. I really think even if you're even if you're not trading equities, you should keep that Apple chart up, because it's really going to be key, that divergence we're seeing there. Okay, have an awesome one. Thank you so much for following. Thank you so much for the banter. And again, 2-week stretch. No need to be a hero. There's going to be plenty of trading to do. And remember, we got a lot of stuff lining up. BOC, ECB, US GDP, BOJ, FOMC, BOE, non-farm payrolls. There'll be stuff to do. You know, let the market come to you. No need to hurry things. Have an awesome one. Thank you so much. Bye-bye, guys.